Welcome to the holiday weekend briefing from interest.co.nz. I'm David Chaston. Today we review the latest migration numbers, we look at the tax levels in various OECD countries, update our look at the number of visitors arriving here, and we'll wrap up with what the other media are reporting. September permanent migration was up significantly over the August level to more than 2,000. This is the normal seasonal pattern, though not as strong as has been in some recent years. Both long-term departures and arrivals are still trending up, although the departure trend continues to be the stronger one. Basically, we attract more migrants from all over the world, but lose our citizens mainly to Australia. The outflow to Australia is certainly not slowing any. In fact, it seems to be picking up and is now running at well over 26,000 a year. We lost another net 1,800 people in September alone, 6,000 in the quarter. This outflow will keep our employment situation very tight and unemployment very low. It will also undercut the real estate market growth if this level continues very much longer. Because that impacts on the wealth effect and how people feel about their future, it would not surprise us to hear of a loosening in the migrant qualification rules fairly soon, in time for an impact before the next election. Tax levels are always a talking point, and they're now front and centre in the election campaign in Australia. They'll also no doubt be a big issue in our general election next year. The OECD has just published some useful benchmarks in this area. This covers 30 of the world's most developed economies, and they note that many of the world's governments are taking an increasing share of the wealth produced in each country, even as that wealth production is rising. They're getting a double whammy. But effective rates vary widely between countries. On a total tax basis, the range is from the lowest at 21% in Mexico to the highest levels which exceed 50% in Sweden. The Europeans are much keener on high taxes than everyone else, and New Zealand stands out as the highest taxing OECD nation outside of Europe, and by some margin. New Zealand is also out of line when the focus has shifted to taxes on consumption. We pay 9% of GDP in such taxes. The Europeans average only 7.5%. Australia is only 4.1%, and the Pacific OECD members average 5.1%. In North America, consumption taxes only take 3.7% of GDP. As we've previously noted from the accommodation data, the inbound tourism industry is in good shape at present. Today we got a look at the latest visitor arrival data for September, and that confirms this growth is continuing. In September, there are 169,000 visitor arrivals, an increase of 2,300 on the same month a year earlier. There were more visitors from Australia, up 3%, but those coming from Korea dropped 20%. Visitor arrivals from Japan increased for the first time since June 2005 and were up 10%. Short-term visitor arrivals are a lot more than you might think. In the full year to September, not including returning residents or permanent migrants, there are almost 2.5 million people who came here for a holiday. And finally today, a quick wrap-up of some other recent news. The Kiwi housing boom looks like a wounded bull, with a slump in home sales and unusually high prices compared with overseas markets, according to a bank report. How come you can buy a big new starter home, 3 bedrooms, 2 bathrooms, 2-storey, 2-car garage in a major US city fringe neighbourhood for $150,000 US? Such a deal for first home buyers in New Zealand is just a dream, but it shouldn't be. New Zealand's largest building society, SBS, continues to work with the Reserve Bank towards gaining a banking licence as its money flows increase. It's been a bit of a roller coaster ride for our currency this week. It started out above 77 US cents and almost got up to 78 cents before tumbling below 74 cents on Wednesday. Since then it has picked itself up to end the week in the mid 75 cent range. You can stay up with all the latest twists by checking the live rate chart on our gallery page. Get more news and start with Newsmaker Views on our news page. Join us again on Tuesday for the freshest finance news on the web. Enjoy your long weekend. We'll see you then.